An early earnings scorecard.
Emotion has no place in your investments, so how do you know what news actually matters? Hi, I'm Eric, and in the next few minutes, we're going to forget the headlines and focus on the facts. Here's what really happened last week.
Through Friday, 11% of S&P 500 firms had reported fourth quarter results. 76% of those companies reported actual earnings per share exceeding projections, and 56% beat revenue estimates. As the trading week ended, stock market analytics firm FactSet projected year-over-year earnings growth of 10.6% for all S&P constituents for the fourth quarter. While this would represent a fifth consecutive quarter of double-digit improvement, such an advance would be the smallest since the fourth quarter of 2017. Last week, all three major U.S. equity indices rose. You will find their weekly and year-to-date performances here, along with last Friday's settlements. Analysts surveyed by MarketWatch thought that the University of Michigan's preliminary January Consumer Sentiment Index would display a reading of 97.5. Instead, it came in at just 90.7, dropping 7.6 points from its final December mark to its lowest level since October of 2016. Richard Curtin, the economist who has long overseen the university's survey, attributed the slip not only to households reacting to the partial federal government shutdown, but also to the impact of tariffs, instabilities in financial markets, the global slowdown, and the lack of clarity about monetary policies. Well, investors were encouraged Friday by news that China had offered a plan to reduce its trade surplus with the U.S. from more than $320 billion to zero by 2024. The concept, first presented to U.S. trade officials earlier this month, would involve China buying $45 billion more in U.S. goods this year and incrementally more in the 5 years to follow. Whether the strategy would work is questionable, as America's strong ongoing demand for Chinese products is arguably the biggest factor in the trade imbalance. Nevertheless, stocks rallied after the news. A day earlier, a Wall Street Journal story noted that U.S. officials were considering easing current tariffs on Chinese imports in exchange for such concessions. As a result of a 4.3% gain in oil last week, WTI crude was worth $53.80 a barrel on the New York Mercantile Exchange at Friday's close. The latest developments in U.S. China trade negotiations and the sharpest weekly pullback in the U.S. rig count since 2016 helped to push the price higher. All right, looking ahead at this week, of course, yesterday, Monday, markets were closed as the nation observed Martin Luther King Jr. Day. Today, Tuesday, in addition to earnings season being in full swing, investors also consider December existing home sales figures. Other than earnings, nothing major is slated to be reported tomorrow, Wednesday. Thursday, beyond the earnings news again, a new initial claims report and the Conference Board's latest index of leading indicators emerges. And then wrapping up the week on Friday, data on December new home sales and durable goods orders may be released if the partial federal government shutdown ends. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. If you'd prefer to read the transcript each week, you can subscribe to that at www.erichagan.pro. Also, if you'd like to get financially organized, head on over to nocostfinancialdashboard.com and take control of your financial future. Lastly, if you want to find out if you're invested right, visit getinvestedright.com right now. Thank you again for your time today. I'll look for you next week.